From Daily Forex, this is Chris, and I'm looking at the dollar yen and Aussie dollar pairs. You can see dollar yen got hammered during the trading session on Monday. Not a huge surprise. China retaliating. Actually, I take it back. It was a little bit of a surprise, quite frankly, that the market behaved the way it did because this really shouldn't have been a huge surprise after what was going on with the Americans adding their tariffs. It's almost like the market had expected the Chinese to say, well, okay, and to just leave it at that. So I think cooler heads are starting to prevail later in the day. That might be what we're seeing here at the 109 level. Now, pay attention to the S&P 500. That's going to dictate where this pair goes next. The problem is this is still a somewhat ugly candle because it breaks a double bottom. So I think 109 could get broken and we could go to 108. However, if we reclaim 109.7 and 110 by extension, this gap up here at 111 could get filled. Over here in the Aussie, we've broken down a bit and have made some pretty significant lows, but there is massive support on longer term charts down to 68. I'm just going to leave this one alone because number one, I don't want to buy it. It's just too much noise above. But you can see they're really trying to break things down, but they still can't really open the floodgates. So if you're looking to buy the US dollar, if this is falling, you're better off buying it against exotic currencies, the South African rand, the Mexican peso. I'm doing a video on South African rand today. Um, if the US dollar starts to pick up, the EM emerging market currencies are going to get hammered. So that's really where you're going to be looking to trade, not the Aussie, because you are playing Asian growth here, but you're doing it the hard way. So keep that in mind. As far as buying is concerned, I'm going to let this go for a minute. I want to see, we really need to kind of get through the 70-50 area to build any type of confidence.